Revenue and EBITDA growth came in healthy. Profits took a hit. Depreciation and finance costs were the reason. The company's opened 21 new stores as well, taking the total store count to 467. Anand Agarwal is CFO of the company. He's joining us now. Anand, good morning. Good to have you here. Festive greetings to you and your team at V-Mart as you execute. I mean, I think a simple question for a Q2. What was same-store sales growth? Q3 so far. What are the numbers looking like? Because this is the festive period, and markets are very keen to know how is this panning out. Lots of debate about whether this is weaker than usual. Are we entering a bit of a slowdown? So let's hear it from you.
Good morning, Prashant. And yes, Q3 has begun on a strong note. I can't say that it is not strong, but definitely it is not as good as we had expected. There's been slight slowdown in terms of the winter. There is a slight delay in the winter season, and also the monsoon got a bit extended. We had a bit of a climatic turmoil in terms of the cyclone in the east parts of India. So far, while the growth has definitely been there, but slightly less than what we had planned for.
Mr. Agarwal, can you expand on that, please? How much had you planned? What is the gap? And what are you really seeing on ground? And also throw in some color on tier 2 cities, tier 3, urban versus semi-urban / rural. Some more color, because everyone's trying to understand exactly what is the consumer feeling. Overall, your same-store sales growth, I think, for the first half is around 13 to 14%, right?
Yeah, that's correct. That's correct. No, definitely, I think we are still targeting high single-digit same-store sales growth. We are still looking at good growth. We are still looking at better footfalls than last year. In fact, the footfalls in the first half of the year have almost been up 50%. So that's a very strong surge. There's a lot of work that we had also done internally. There's a lot of changes that we have brought in internally, which are yielding results. There's a lot of new stores that we have opened in the first half, and they have become on a very, very strong note. So despite the climatic disruptions, I would still say, I think we are still seeing a decent amount of growth on the ground. There is definitely much better consumer sentiment. There is much better buying which is happening. There is better footfalls that we are able to witness, especially in the tier 2, tier 3 towns. That part of the country definitely had been severely under stress for the last 3-4 years. So we are seeing some, relief coming in that geography, and that is very helpful. That is, acting as a tailwind. But yes, there's still slight bit of concerns around, how the winter season is going to pan out. And especially in North India, winters account for a very large part of the apparel market. So that's a bit of a concern, but I think it's a matter of time. So we should be hopeful and optimistic that we should get there very soon.
Okay, all right. Hi, Mr. Agarwal. Good morning and good to see you in. I was briefly in UP and I saw quite a few of your stores out there. So good going on you. Well, let's talk about a couple of numbers then. You've told us that on a like-to-like basis, high single-digit growth is what you're looking at. So we get that out of the way. Earlier, you had hinted that the revenue growth will be in mid-teens, around 15%. Do you believe that is possible? Point number one. And point number two, what about margin? What's the outlook? Because the core V-Mart margins this time around, just for the past quarter, were actually a little bit lower than Unlimited. So blended, what should we look at?
Definitely, as far as growth is concerned, we should be looking at definitely, high teen growth for the full year. Quarter 3 is our biggest quarter. Historically, it's always been like that. And a large part of sales and also a very large part of profitability gets accounted in quarter 3. So quarter 3 is the big quarter to watch, and we are all, working very hard towards that to make it happen. First half usually is a small number in terms of profitability. We've grown from last year. We've improved from the last many years, and that's very visible. There's been a lot of work that we've been trying to do at the Unlimited front, which is, in South India, and the margins, therefore, are reflecting of the good work that has happened. The work has not finished. I think there's a lot of still, ground to gain. And from a post-Ind AS perspective, while the profitability for South may remain slightly higher than, the core V-Mart numbers, but that's because of higher rent, which gets accounted under Ind AS 116 and thereby gets nullified from the EBITDA numbers. But otherwise, on a pre-EBITDA, pre-Ind AS basis, the profitability is slightly lower than core V-Mart. as far as South India is concerned under Unlimited. But in the next 1 year or so, one or 2 years maximum, we should be able to bring both Unlimited and core V-Mart profitability at par. And that is what we've been working towards. And all the new stores that we've been opening in South India under Unlimited, in fact, have been delivering higher profitability even than some of the core V-Mart stores. So that's very heartening.
So you're saying high teens growth. That's on the revenue front, right? You're confident of clocking that. Okay, fair enough. Just give us the store rollout plans as well going forward. How much capex will you do, and what really the numbers will look like? And also, second part of my question is on pricing. When you're talking about this high teens growth, is it going to be more a function of more stores and more volumes, or is there any uptrend in pricing at all? Average pricing, or is it actually stable, or is it declining? Just again, to kind of get a sense of the real consumer sentiment.
So a large part of our growth always is volume-led. We've always relied on volumes to grow our business, not really looking at price growth. In fact, we've been reducing prices for the last 2 years. And in fact, in the current year, I think we are almost done with the price correction. So there is no price correction or price increase on the anvil. Whatever changes that might happen on the average selling prices, that may happen because of the mix change, if at all. But otherwise, the strategy is always to grow through volumes. In addition, we will also be opening around 55 to 60 new stores this year. So that's a slight increase from what we stated last quarter. So marginal increase, but definitely, yes, it looks possible. We should be looking at around 55 to 60 new stores for the full year. There might be 2 or 3 store closures, but that's it. That is a usual norm. So nothing unusual around that. I think the same store sales growth, as I mentioned earlier, should be high single digit. So yes. 10 to 12% area addition and mid to high single digit same store sales growth should be able to give us 16-17% around overall revenue growth.
Okay, all right. And LimeRoad turns positive, a bit positive in the final quarter of this year. On track?
No, I can't say that it is absolutely going to be a bit positive, but yes, indications are there, reducing our losses quarter on quarter for the last 5-6 quarters consequently. This quarter also the losses have decreased by almost 60% year on year. So that's a very good sign. So all work is happening towards making it less cash burning, but let's see where we will reach.
Appreciate you joining in, Mr. Agarwal. Wishing you, your entire team, and all the best in these festivities, and wishing you a happy Diwali in advance as well.